Yo, it's nice to see you again, guys. And today we're gonna talk about what is better for me, especially to trade swing positions or to go day trading and to go day trading through the positions in the day. So most of people now are choosing swing trades because they have more time to do their stuff, to go work, because a lot of people are, they're mixing the work with the trading. But there are some differences in the methods of opening the swing positions and the intraday positions. So today we're gonna show how is more comfortable and to whom to trade which style. So for example, for me, it's comfortable to trade both styles. If I know if the price, for example, is going all the way long and I'm looking at the price from this perspective and I want to see the price hitting this all-time high, for example, I'm gonna take some trades here, some long trades, and I can wait for the confirmations. I can put more margin into these trades. But what about the amount of money you freeze for the time you're getting into this trade? So this is the question. So basically the differences is how the price acts on the lower time frame, for example the 5 minutes time frame, and how the price gonna act on high time frame. And the point is, the higher time frame is, the cleaner the price action. Because when the price is going, for example, 1 week time frame, and we have the liquidity sweep on weekly time frame, this is mostly the signal to go short if this is the highs, and we know that the price gonna go short long way to the similar fractal on weekly time frame on the short. So what I mean here is, for example, when euro get to this fractal, and this is the weekly time frame, after we hit this target, the most common target gonna be this weekly imbalance, this weekly fractal over here, this fractal, or this. So all this consolidation, all these lows are gonna be our targets, but on weekly time frame. But what about the, for example, 5 minutes time frame is, we can have many resweeps, we can have many liquidity sweeps, additional liquidity sweeps. For example, here is our buy side liquidity, which was swept by this high, and this is one more swap after the London opening. So this is hard to hold like this, you wait for the confirmation. You wait for the confirmation, after that you jump into the position, but you get the stop loss just because you're you're jumping inside. And here is very common and very useful tool which will help you to understand how the price additionally can swap and rate the liquidity. This is the sessions. So first of all, what I want to say, if you trade intraday, intraday is high time frame poise. What I mean by high time frame poise is, if you trying to go short in the 1 hour time frame, you need to understand where the price gonna be on 1 hour time frame. For example, this is here. This is 1 hour time frame imbalance. So this fair value gap, which is placed on 1 hour time frame, is strong. Why? Because the price couldn't get through it, and after getting, it's absolutely the same time starting to go short. So it respects this fair value gap. So what I mean by this, you always need to synchronize higher time frame with lower time frame. So because if you are looking at the 5 minutes time frame over here and you're trying to say that this is the liquidity rate and this is the liquidity sweep, so I'm going short, this is not how it's working, because you don't know where the price is on higher time frame. But when you have the sessions, when you got this high and this liquidity sweep in the London session, and after that the New York opens with this liquidity rate, after that you're getting the model. Absolutely true that you're going to go short, because this is the most common models which market can give you, and you can't lose these trades. most of the time. Yeah, absolutely there are times when the price going up from this type of models, but the point is this is the most high probability of the trade to get to your take profit. Why? Because the price get the rate of the liquidity over here. This is the London high. This is some equal highs of the Asian session, and this is the opening of the New York. So the logic of the session is to work with the liquidity of the previous session. For example, this is London, yeah, and this is New York. If the New York swept the liquidity of the London low, we can say that the most common point to go now is the London's high, because this is the this is the same as going shorts from this area and going longs from this area. This is our targets basically. Yeah, so when you go intraday, you always use the sessions to understand how the price work with the borders, with the levels, with for example with the level 0.5 of Asian session. It's strong level, the price usually holding it. So this is first. If you go, for example, swing trades, first of all, the swing trades are good for those who want to spend less time looking at the charts, like me and like other guys, because we know that the price is so dirty intraday, and sometimes the intraday charts are so dirty that you can spend much time on it. But what about the high time frame? So basically on daily time frame, we can see that the price is going on the range, and this is the deviation. Yeah, we can say it's manipulation, and this was the AMD model. So for those who want to go into the long positions, like long-term positions, they are looking for these models over here and waiting for the confirmation. So if you're going to go swing, you need to understand that you will stay in the position for a very long time. You can stay for weeks. Yes, you can close it earlier, but there is no point because you're targeting some sort of liquidity. Yeah, if the price is going to be somewhere here, yeah, and this is your target, you can close. But if the price is going to be here, you never know how long the price is going to give us the reaction from this 0.5 point of this deviation, of this range. Yeah, so we can go here, here, and stay on this point because the price was on this level for a long time. So it could repeat again. But the point is, confirmations on high time frame are always stronger than on the LTF. So basically what I want to say here is this manipulation and this test over here, which is almost perfectly, you can see how the price holds this high border, because this is the daily time frame fair value gap, and this is the high of the range. Yeah, so this high. So when the price hits this daily time frame fair value gap, hit this border and fake to go through this daily time frame fair value gap, we could say that most common that the price gonna go all the way short from here to this level. Yeah, there are some sort of manipulations that can be on this low, yeah, because this is also some sort of the zones, but this is the most, this is the most safe and this is the most common model you can enter. And basically you're just waiting for the price to confirm, yeah? So where is gonna be the confirmation? The confirmation gonna be on this level over here. You're waiting the price to hit to this level. When it hits, you look how the price close. If the price close with the candle down here and the second candle is going up, so this is the inversion, you don't enter. There is no way to enter this. But if the price close firstly on this level over here, yeah, like this, we close here, no, I will delete this. Yeah, let's say like this. So this level, when the price hit it, gave us some sort of reaction, because the reaction is something that tells us when to enter and when to not. After that, we hit through it and close above, or when we confirm, what the confirm is the break of structure. So what I want to see here is how the price hold on this level. If not, and we go down after the confirmation, after updating these lows, this is the CBOS, the conformational break of structure. So now I could say that, okay, I will wait for the price to get back to my discount area, yeah, to my premium zone, and after that I will go shorts. So this is how I work on the high time frames. This is a little bit different than on the LTFs. And you basically can choose, do you want to spend lots of time waiting on these positions? Because guys, you need to understand that on the high time frame, there are so many strong zones that could hold the price for like weeks on this level, weeks, because this is already the fair value gap. Like, yeah, this is weekly fair value gap, which was tested by this fractal over here. And this is the break of structure, but exactly, we could get the reaction from this. And because it's weekly time frame, we need to wait 1 week for the candle to close. So after the candle close in 1 week here, we should wait for the second weekly candle to go back, to give us some discount, give us some proper risk reward, and after that we enter the position. So that's the hard point. But for example, yeah, when we look on intraday, we can see these type of models forming every day. For example, some poise over here, yeah, the liquidity sweep, boom, 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 and we just entered the position. So for my opinion, the high time frame is strong to understand the bias and to determine where we're going on the price, but to open the positions, I always prefer to go intraday, because you can open, I mostly open like 5 positions a day. For example, today I was opening these positions on Germany 40. I was going shorts over here. After that, gold long from here, Nasdaq take profits, Euro USD, it was break even because the price was moving like shit. But you know, the point is, I could try so much time and so much practice in 1 day, which is the most important part of the trading, yeah? When you trying and trying again, that's the point. So guys, you can choose the strategy you want most. Thank you for your time, thank you for the attention, and join our Discord, join our Instagram. Thank you for your time, guys, see you.